Here, people.
Wonderful.
Okay, Emmy, take it away.
All right. Thank you so much for joining us this evening. This is Emmy Venner with the Athena Alliance CLT. I am the founder and executive director of this organization. We are a women led gaming organization based out of the Carolinas. This evening, we are starting our very first Goddess Review with our project director, Victoria White. So we are super excited. Thank you so much for joining us this evening for this wonderful conversation. We are going to discuss how to count the content bag. How is it that you are going to not only file your taxes this year as a content creator, but also build up your brand? Are you going to establish yourself as a sole proprietor or an LLC or even a corporation? These are the questions that we're going to ask and answer for you this evening. If you have any questions aside from those, you can go ahead and leave them in the chat and we'll make sure that we address them as the evening goes on. I am going to go ahead and turn this over to our wonderful host, Miss Victoria White, aka Fangirl Review.
Hi, everybody. Thank you so much, Emmy, for that wonderful introduction. I am Victoria White of Fangirl Review LLC. I am a content creator, but what's most important, I am a person who is passionate about taxes. I currently juggle three jobs and a business. So, and I have no kids. So, where are my write-offs? Where are my how do I hide my money? How do I not pay like Amazon? Those are the questions I ask, and I always want to empower others around me to be aware of their tax obligation so you do not get hit. I've been hit before with a 2500 bill. So, I was blessed enough that I could pay it off right away and didn't have to do a payment plan. But let's not have that happen to anybody. Let's get in there and handle it. And I want to introduce my amazing, amazing speakers for the night because they are the people who actually know about taxes and money and accounting and all that fun stuff. So, first up, I want to introduce Lashonda Smith. Please tell us a little bit about yourself.
Hi, everyone. My name is Lashonda Smith. I am an accountant with a rather large private corporation. I'm actually a supervisor for our accounting team in the greater Philadelphia area. I have my MBA in accounting, and this is just something that has been watching entrepreneurs grow and being able to assist in any way I can with a little bit of wisdom that I have has always been something that I love to do. Even from my aunt and uncle who have a water ice stand in St. Louis to some friends who have started churches, charities, and other small businesses locally. So when Victoria, who has been my friend since the sixth grade, I will not tell you how many years that is. I'll let y'all guess whether that's 10 or 20. Um, asked me to be a part of this panel. I definitely was more than happy and willing to be a part of this panel for you guys.
Thank you so much. I'm happy to have you here. And it's only been 10 years because we were young. I don't know what you're talking about. That is my story.
Thank you, ma'am.
Yes. And our other co host of the night is Jermaine Sanders. Go ahead and introduce yourself.
Yes, I'm Jermaine Sanders. I am a public accountant. Been in public accounting for 6 years now. Been in taxes for 5 years. This is my fifth tax season currently. I am in the Charlotte area, and I'm also owner and CEO of J Sanders Consulting. So we have all your tax needs, accounting needs, payroll, you name it, we got it.
I know that's right. So we have a beautiful, beautiful presentation for you guys tonight. Hopefully, we can knock out some of your questions before you even have a chance to ask them. But please just say whatever questions you may ask, and we'll try to get to them. But please keep in mind, this is not tax advice. We are not telling you what to do and all of that jazz. We don't hold us accountable, don't hold us liable or anything of that sort. We are having a conversation about the business of content creation. Okay. Let me throw in that little, you know, disclaimer real quick. All right, so let's dive in, and hopefully you guys really enjoy this. I thank you so much, Lashonda, for making this beautiful presentation.
Pleasure.
Let's talk business. Ow. Who wants to take it away?
You want to go, Lashonda?
I can just get, yeah, sure, no problem. So, oh sweet Jesus, this is small. Um, I need my glasses. I need my other prescription. Okay, so there are really four types of business types that you can set up for any business that you're going to start, including your content creation. Sole proprietorship, which is just you yourself as not a separate entity, just creating, conducting business maybe underneath another name, just under, maybe as yourself. Any income that you come from, just you. A partnership is just what it says. It's you and another person or several people. It could be a limited partnership where each partner is given different, varying degrees of liability and accountability, as well as managerial power and decision making. You have LLC. Everyone makes fun of LLC Twitter. I actually like them, but but they combine, LLC combines the best of the sole proprietorship partnership world, along with the S corp, where you're a separate entity from you as an individual, which shields you from a lot of liability. But also, you don't got, so you're like a corporation in that instance, but you don't got that tax issue. You don't got that double taxation like an S corp. And an S corp again is another completely separate entity with members, but you have that double taxation. It's the most secure you can get as far as debt liability and and personal liability for any like legal issues. But you're going to get that double taxation. You're going to get taxed as a corporation, and whatever you take out is going to get taxed. So it's the least fun of the four.
So it offers you the most protection, but also offers you the most taxes. So
Most taxation, so it stays in your pocket. Jermaine, if you want to go into anything else that I may have missed, I just high level
I was
overview.
gonna say with the limited liability, because I'm the owner of an LLC. The thing about an LLC is, like Lashonda said, it allows you to not be so liable. Versus a sole proprietorship, if anything happens, you are 100% liable. If you get sued, you're 100% liable. And guess what? You will have to pay out of pocket anything, or may have to face jail time because you're the sole owner of the business. Your social security number is attached to the business versus where LLC, you have a tax identification number. Easier to get loans, easier to get other people to join you. Just like, with a LLC versus sole proprietor, it's harder to get a partner with a sole proprietor versus LLC. LLC, you can create members. So you can have an entity, and you can have, you and another person could be working. It's almost like a partnership, but again, the double taxation you don't have to worry about. So you and another person could ultimately be running it as the presidents of the company. And guess what? If anything happens to the corporation or the LLC, you guys you guys won't be so liable because it's under a tax identification number, if that makes sense. So yeah.
yes, and that's the EIN numbers.
Yes.
They are free. It is free
They
to
are
get
free.
Yeah.
them.
Do not let any, please do not let anyone tell you that you have to pay for an EIN number. You literally can go on the IRS website, familiarize yourself with the IRS website as well.
Yes.
I mean, just so there's always new notices coming out. Every year the tax law changes, even in the most nuanced ways. But familiar yourself with your IRS tax website. I mean, the IRS website, and you can go in there and apply for a new EIN for your company. Make sure your name's available before you do that. All of these things, so that don't let me. There have been many people who have been scammed and paying $200 and $300 for somebody to go on to the IRS website and do that for them. So, but that helps again establish your business as a completely separate entity from you as an individual. So again, if you get sued for libel, if you get sued for copyright infringement,
Yeah.
if you go into default on a loan, it's harder for them to pierce that almost corporate veil is what they call it in business law and in accounting, it's harder for them to come after you unless you have been grossly negligent as a operating member, to come after you personally. As sole proprietor, they can come take your house, your car, your kids, your husband, your dog, and leave you with a tic tac and lint at the end of the day.
And
We're
you may
talking
have to
about
go to jail as well.
Uh,
we're talking about creditors. We're talking about the IRS. It's just the varying levels of protection as you go up from sole proprietorship to S corp.
Also, when you're setting up an EIN number, you also want to do it with the state as well. So whatever state that you're residing the business in, outside of Texas, Florida, so tax-free states, Texas, Florida, Tennessee, and I think maybe Utah. I have to get that one. But those are all tax-free states where you don't have to worry about setting it up through the state. But if you live in states like, for example, North Carolina, Pennsylvania, New York City, Maryland, Washington D.C., you not only getting it through the IRS, but you also want to get familiarized with your state as well, because every year, a lot of business owners, their business goes under or is not recognized through the state because they have not filed articles. It's called articles of organization, and all
mhm.
that is basically you're filing paperwork, you're filing a form to say, hey, I'm going to be the owner of this entity. So basically, the state will recognize you as the owner, and they'll recognize that business as a business. So whenever you have that tax ID identification number, you're able to make money within that state. So that's how that works. And we'll
Yep.
tie that in together when we talk about income, because it'll make sense on you. Because a lot of you guys are probably thinking, well, why does it matter if I need to file through the state, and why does it matter if I need to file through North Carolina or through the IRS? We'll explain that here in a few, through income and also through self-employment tax as well. So it's very key to file through the IRS and also through your state.
Thank you. We gotta dive deep into that. Tax tips for content creators. Income. Let's
Okay,
get this bread.
let's get this bread. So I just wanted to give you a overview. You want to go ahead and skip kind of to the next slide. Uh, is like what is considered income is any revenue that you make from brand partnerships, from advertising, gifts, as far as like brand partnerships, that's any sponsorships, promoted content that you are creating, sponsor content, any promotions or contests that you are part of, anything that you are compensated for by a brand or by anything you're compensated for, like for advertising space on your content, is all considered income. Now the amounts there, you anything over the anything over 600, excuse me, anything over $600 that you get from one particular brand or one particular contract or interaction will anything over $600, it should automatically generate a 1099 in the EC, or a 1099K, which is a non-employment compensation, and you should be using that to file your taxes. However, let's say you have one engagement with one brand that paid $500. A, raise your rates. B, um, you will not get a 1099, and you will still need to claim that income as income. So it's really important that you, as the business owner, as the content creator, keep your records of everything that you receive, because you will not get one from them. They will not send it to you, and you will still need to record that income.
And what happens is a lot of times it'll be technicalized as paid under the table. And what happens is that they may not report that, but you have to report that. And the reason why you have to report that is because still at the end of the day, you want to see how much you're worth as a content creator. So even if you are getting this money, say they give you a check or they just pay you cash, you want to keep a record of that, because that is all your sales. Now, say it may be a credit card transaction, or say you get a contract, then like Lashonda was saying, you'll get either a 1099 NEC. If you want to skip to the next one, I think.
Yes.
Yeah, there we go. You'll get a the 1099 NEC, which is non-employment compensation. So because we are all sole proprietors, we all work on an LLC, we're all business owners, right? So we're not employed by anyone. No one, no, we're not on anyone's clock. We're not clocking in on anyone's time. We're not on anyone's payroll. No one's paying payroll tax on us, and we're not paying payroll tax on any paycheck that's coming out of our check. So basically, any check or any money that someone may write to us, that's all of ours, which means that it's not taxed. So what'll happen is you'll receive a 1099 non-employment compensation, and what you want to do is you'll report that as sales. And like Lashonda was saying, I don't know if you guys remember at the beginning of the year, but President Biden has signed into law because a lot of content creators are making a lot of money. This is a lucrative business. What happens is a lot of that money is not reported. Well, if the United States is in a tax deficit and we're in debt, and content creators they can claim to make $100,000 or $1 million, you need that tax money. So what he did is he signed into law at the beginning of the year, said, hey, Apple Pay, PayPal, Zelle, any payment processing software that may be used for you to send money back and forth for someone to pay you. Guess what happens? If anything over $600, they're going to automatically send you a 1099K. Now that's different than this 1099 non-employment compensation. A 1099K is basically credit card transactions, and basically what it'll list out how much you made in January, how much you made in February. Also list out how many transactions you had in a year. And the total gross of the transactions is the total sales that you receive from whoever or whatever payment processing software that you use. So you guys just be mindful that anything over $600, you're going to automatically get that in the mail because yes, you have to report that. And if you get that, you have to report that to your tax preparer or to whoever that prepares your taxes. Because what happened is if you don't report that income, whenever you do go to file your taxes, say your taxable income is around 30 grand, you're going to automatically qualify for earned income tax credit, which will probably bump up your refund. Well, what'll happen is you won't get that refund because the IRS say, "Oh, wait a minute, you have $50,000 of outstanding money out there because you ignored that 1099K or you ignored that 1099 NEC." So you guys just make sure you be careful to report and keep track of all of your sales. Another thing too, I had a client that was not keeping track of any of his reportable income. What happened is he had did a job, he did a contract job, and he ended up filing his taxes and he ignored the 1099 NEC. He filed his taxes, but he ended up getting a notice from the IRS saying, "Hey, wait a minute, you got some outstanding income," and what they're going to say in the tax notice is underreported income. That's what it's going to say. So you guys just make sure that you always keep track of all of your sales. Any money that somebody paid you, or any money that you say that somebody owes you, any contract work that you do, make sure that you're keeping account of all of that. So that way, whatever they report and whatever you have on your records, or whatever your accountant always matches up. So that's just one trick and one little thing that I just wanted to say as well.
Thank you. Actually, I often I work with partnerships. I've been featured on other channels and things of that sort. So I've received money. So I know I had to report it. Like I'm prepared. I have a little spreadsheet. I have everything laid out. Like this is that. Um, we haven't gotten into like expensive yet, but like so I have my spreadsheet of all the income that has came in for the year, and it does total over 600, but there was never one single entity that was 600. So, but I was like, I'm not gonna play with y'all. Y'all setting me up
Yeah,
here. Hold
yeah,
on. What
yeah,
you're not gonna do is get me. So that's why a lot of people, when I just first introduced this information, individuals were like, "Oh, but if it's under 600, I'll have to report it." Oh, don't do that.
yeah.
Don't
This is
do
not
that.
But
the this is not the and even though and please, Jermaine, you can go ahead and you can look at me sideways. I'm about to say them. This is not like when you get the little savings account with your little like $2.75 in interest that you earned over the year. Like, no, I'm not putting that on there. I'm sorry, I apologize. I'm a bad example. Please don't follow my example. The IRS has come after me previously, but in my past. So that's a bad example. Always report everything that you get. I
yes,
learned. Don't get us out here like Wesley. But what I'm saying is but you definitely want to make sure that you are putting everything on there, and that includes any gifts that you get as well that are valued over $100. That is also considered to be reported as income. So that nice little, I don't know, whoever you're doing content, let's say you have content creators who are doing gaming, and they get a new system, a new new equipment that go with your gaming system. Or let's say, I don't know, someone else also does makeup, and they get I don't know, something from Rihanna. First, please holler at your girl. Second, if it's valued over $100, that's considered income. So you guys need to make sure that you're not only, oh, this is nice, this is swag, it's also going to cost you some money.
Yeah.
You're going
Yes.
to pay a little bit of tax on that.
Yeah. So
So if you
like,
can get it,
I know Shonda was trying to give like
yep, go ahead,
examples.
write it down.
I'm trying to grab something for you guys without knocking over stuff. So, prime example, something easily that is sent out to a lot of content creators is a headset. This is a Steel series, but Elgato sends stuff all the time. This right here is over $100 easily. You gotta report it. There's so many other things that can happen that you will get free stuff of. You're like, it's free. No, it's not. It is
And
not.
I want to make this little mention because what will happen is on the other side. See, a lot of people aren't thinking about, well, why does that matter? Why? A lot of people are probably asking the question, why do I need to report anything over $100, but not anything less than $100? That's a very good question. The reason why is that on the other side, how are they reporting that money? How are
An
they
expense.
how are they reporting that money? Because their accountants are going to report that same income, and they're going to say, "Oh, well, this was a gift." And any gifts on the corporate side, you have to have a tax identification number. You have to have a social security number. So what happens is, even though they may not report it on their side as a expense, or may not report it as a wage on their end, on you guys' end, that is a sale. Because guess what happens if they report that as a charity, anything over $100 on the corporate side, you have to say, okay, I gifted this person this much money, so I can get this tax credit for this. So that's how that happens. A lot of celebrities do it all the time. If you think about it, like for example, when you hear about NFL players say, "Oh yeah, I just did this charity for the Boys and Girls Club," or they're wearing something for Old Spice. Old Spice is paying them, and they have to report their income, even though it's just a T-shirt. You have to report that because that's a gift, that's a sale.
Hmm.
For them, it's a sale on our end, or on you guys' end, it would be more so. It's a sale. It's a gift. So if that makes sense. I think I went in circles there. I'm sorry.
No, no, we are making sure people understand because it's very easy for people to forget. Like, what you get for free, somebody on the other end is writing off and putting it
Yes.
down, and your name is
Yes.
now tied to it. So when they
Attached
are
to it.
doing
Yeah.
their taxes on their end, you're getting dinged, like bing, and then all of a sudden somebody in the little office is typing it up. Well, did they claim it over here? They did
Well,
not. Flag, and now
It
Lashonda,
does
there's a
not
problem.
mention.
Lashonda can speak on that too. If she's doing books, or she's doing her month end or quarter end, and then she's looking at the bank statement like, why do we have so many $100 charges and it's all to the same account? That's a red flag to auditors. Because
Hmm.
think about it, they're
Mhm.
also having to report to their shareholders. As I say, it all ties back into the same thing.
Okay, great. So we have a question from the chat. How exactly would you go about reporting something $100 or below? Like, what will be? How do you do it?
So
Uh,
now, go ahead. I'll let you go ahead, Jermaine.
it depends on the value. So however much. So say, um, for example, I'm trying to think. Say you're gifted Madden 21 or Madden 22. I don't know which Madden is the newest
22.
one. Or
You got it.
you're,
You're
you're
good.
gifted Madden 22. Whatever the retail price of it was gifted to you, that's what you would report. Because what happens if you get Madden 23 in the same year and you didn't have to pay for it?
Hmm.
On their end, that's an expense. Or on their end, that's a gift to charity. But on your end, you received the sale. That makes sense because you didn't have to pay for this, and this is going to make you money. If I'm able to take Madden 23 and stream it and make money off of it, that just increased my value. That's just increased my income because I have something that no one else has. If that makes sense.
That is a great example because a lot of streamers receive stream keys.
Mm-hmm.
We receive free games all the time. And
That's
I
so
don't think any of us, ding, this girl right here, I've received stream keys and I did not think of it. I always think of something physical, like
Hmm.
my headset. That's something physical, and therefore you think of that. But a stream key for a free game is actually considered will be an income, and if it's if you get the retail value, put that in as your income for that year. So that is your way to write it off and count it in your little spreadsheet of items, and then all of a sudden you've made X amount of dollars.
because on the opposite side, which we're getting to next is, well, say I wasn't gifted Madden 23, but I know that a lot of my subscribers really love to see me watch. I mean, really love to watch me play Madden. Well, I'll just go ahead and go ahead and get Madden or pre-order Madden so that when it comes out, I already have it. But now that's not a gift. That's not a sale on your end. That's not income on your end. Now that's a write-off, which is what we're getting to next.
Yes, thank you. A quick question: do you use a form 1099 or just add the value?
A Form 1099 will be given to you by whoever paid you for the work that you have done. So because you guys are under the cash method, so you paid on the services that were performed. Anytime that the service is done, so say you did a contract and it paid you $8,000. What they're gonna do is they're gonna send you a check and they're gonna also attach a 1099 along with it. So 1099s, you guys don't go looking for 1099s. Get that. 1099s will show up to your doorstep if that makes sense.
They will find you. If it's under a
Yeah, they
certain
will find
amount, they won't send you one, but that does not mean you don't have to report it. You just
right,
have to
right,
you still have to report it on your end. They might not send you a
right.
1099, but you still have to report it.
Yes.
Okay. So let's
So this is one where I really want everybody to take all their pencils and pens and paper out because I really want you guys to take key notes because I'm getting ready to save you guys a lot of money. Lashonda, what she did here is absolutely awesome. I just wanted to kind of break down the Schedule C for when you guys will report that on the tax side to your tax preparer. So I just want to give everybody a minute to get some paper, get some pens. I'm getting ready to help you guys out a whole lot here.
Get your
yes.
voice recorders. This is knowledge right here, folks, and this is something that your account will probably charge you about upwards of $75 an hour for. So this is getting it for free.
Mm-hmm.
Yes. So definitely I think this is the most asked part of it. What can I write off? What is what how I think that's basically what all my Twitter feed was. Once I said, "Hey, we're going to do a presentation on taxes," immediately, what can I write off? I just bought two monitors. I bought a monitor. What can I do? So, Jermaine,
So, Sean, you want to go ahead and start off, and then I will
This is
kind of back up from you.
I mean, this is just a really high level, but like anything that you bought for your content creation. So I'm talking about editing software. I'm talking about your cell phone if you have a separate phone for recording, or a DSLR camera, or your ring light, not a good one, not the one that I bought for $20 at Amazon that broke. Like a real one. Your tripods, your again, any upgrading of equipment, of course, computers, your laptop, your tablets, your monitors, your webcams, your transportation. You can, if you're traveling to do a conference, to be at a conference, or some type of event, that is also can be written off, that you're going to be earning income from. Advertising, marketing, stock photography subscriptions, like think about Getty Images. If you're working any type of trademarks and copyrights that you have, these are all things. And then of course your website, any streaming and hosting fees that you have to pay for your platforms. All of these things are considered expenses that can be that are deductions you can write off, that are super super common. Just make sure that we are a reasonable and in them, and like don't be trying to round up at the extra thousand, folks.
So
Oh
Please
wait,
don't.
Jermaine, before you jump in, we have a question real quick. Can you do these write-offs without an LLC? If you are
yes,
just
Yes, yes. As a sole proprietorship, absolutely.
absolutely,
Yep.
absolutely, absolutely,
okay.
absolutely. Because if you think about it, you guys are going to invest more into starting and maintaining and operating the business than you are on sales. Because the sales don't come into the back end. If you think about it, it's all about, well, let me get everything I need so I can be at least be functionable. So I'm gonna actually break it down to by line item on the schedule C,
Oh,
which so one of the questions that Emmy had asked me, Lashonda and I, were how to file as a content creator and independent contractor, and I just wanted to break that down. So on my side is if you guys were come to me as a client and say, hey Jermaine, I need J Sanders Consulting LLC to do my taxes and prepare my taxes and file my taxes. Okay, great. What type of income did you have? Oh, I'm a content creator. Oh, great. Well, let's go over we've already went over your income. We know that. So let's talk about your expenses. And this is where a lot of other tax preparers and CPAs will charge you guys at the yin yang, because right around this time, they are not going to sit down with you guys and go over line by line item what you can write off. So I hope everybody has the pencil and paper ready, because I'm getting ready to go line by line item with you guys.
this will
So,
also hold on. This real quick. I'm sorry to cut you off. This will also be available on the Athena Alliance YouTube, Fantasy Network, Fangirl Review. We are
yes,
going to have this info out
yes,
everywhere. We are not
yes,
gatekeeping anything. We
yes,
want everybody to not have to be afraid of tax time. So we're going to put it every
yes.
platform possible that we can get it out there for. It will be there. Okay.
My girlfriend always reminds me all the time, two things you can never escape is death and taxes. So we might as well not avoid it, right? So on the first thing, I want you guys to, and it may not apply to everybody, but say you have a T-shirt. Say you're a major large content creator and you've created, you have your own, for example, like Vikki has her own sweatshirt. Vikki, I'm pretty sure it costs you money to be able to get that sweatshirt made, to be able to get that sweatshirt, right?
Yes.
But and the money that you make off of that is a sale off of the sweatshirt. But guess what? You had to pay money to get the materials and supplies, and you also had to pay somebody to get that sweatshirt made.
Mhm.
That is called cost of goods sold. COGS. For us, it is the cost that you pay to sell a good that is under your EIN number, so under your tax identification number. So all of that is important. And it kind of counts against your gross profit, but again, it's a write-off because I had to expense money to sell a product. So that's the first thing I wanted you guys to understand is cost of goods sold. Cost of goods sold is the cost that you paid to sell your product. So again, the example that Vikki, she has a sweatshirt. Vikki wants to sell a sweatshirt, but she has to pay advertisers. She has to pay people for materials. She has to pay people just to get that product out, so that way she can receive some income outside of the streaming income that she has. So that's the first thing. Thing I wanted to get into is that I know a lot of people ain't walking to where they gotta go, right? I'm pretty sure you're using car, you're using some type of transportation, correct? So your car is a write-off, not your whole entire car unless it's over 6,000 pounds. I want everybody to write this down. I cannot write my car off unless it is over 6,000 pounds. That's the only thing that you can't write off when it comes to your car. Now, I'm pretty sure a lot of people had to get an oil change. A lot of people had to get some tires. A lot of people had to get maybe a tune-up. A lot of people had to get some type of repair done in your car that if I didn't get this done, I'm not going to be able to. I'm not gonna be able to get if I don't get my car done, I can't get the Walmart to get the headset, or I can't get the Walmart to get the battery. So all car repairs that were all car repairs that were related to the business is all a write-off. The mileage that you accumulated from your house to wherever you had to go, that all counts. If you had to go, even you have to go to your friend's house and stream to your friend's house, that mileage counts. And this is why we say it's very important to always keep account of everything that you do, because all this stuff is a write-off. If
Wait, let
you
me
live
just
in,
piggyback off of that. So guys,
Mhm.
an example is conventions. We all go to conventions. What
Yeah,
how much did it cost for you to get to the convention? Where did you stay at the convention? The cost of the tickets for the convention. So
yeah,
that is all travel and mileage. If you had to drive,
yes.
if you had to take a train, an airplane, whatever. So like that's
If you had to go
a
to a
more
conference,
relatable example for the content creators. So you guys, I'm sure they started opening up some conventions. I went to New York Comic Con last year. Guess who has their ticket? Guess who has their train ticket?
yeah,
I have that
all
information ready to go. Write that off. So please keep that
yes.
in mind. But real quick, we had one more question. What about subscriptions such as VPN? But I think that's
I'm getting,
under.
I'm getting to that.
Okay.
I'm getting ready to get to that. I'm getting ready to get to that. For so the next thing I want to do, so that was it for car. Also, if you travel, I know some people say they live in Pennsylvania. I know here in Charlotte we have a new toll system. If you had to take the toll that was related to your business, that is also included on car as well, on the car expense. The next thing I wanted to talk about too is insurance. Not health insurance, but just insurance. A lot of people, I'm pretty sure you guys have a lot of equipment that costs a lot of money. If something messes up, you're like, well, that's what I have insurance for. The money that you pay for your insurance on your equipment, on your car, that's related to the business, that is all a write off. All of that is a write off. All of it. Any insurance that's not health related is a write off. That is related to the business is a write off. Now, one thing I do want to say is that if you're LLC and you paid insurance out of your pocket, so you're not working under anyone. And this is just another tax tip. But if you are a LLC and you work on your own and you were not employed by anyone, which means that, well, I live in America, so it is by law I have to have health insurance. So you're paying health insurance. That is something that you can also write off, but it won't be on the Schedule C side. It'll be on another schedule that you will file on another schedule. But that's another tax tip. Like I said, everyone's tax situation is different, and that's one thing I do want to reiterate real quick is that a lot of these platforms, a lot of people can easily go to YouTube and they'll say, oh well, if I, for example, Lashonda probably sees this a lot. I'll go exempt for half the year because my homegirl went exempt for half the year. But your homegirl situation may be different than your situation.
Shauna
May
needs to
I
weigh
please
in.
interject real quick? For the love of God, please don't do that. For the love of God, don't do that.
Yeah.
To be zero
Yeah.
situation where you go exempt. Because what's going to happen, I guarantee you, this thing will happen to you. You're going to forget to go back from being exempt.
Yep.
Go back from being exempt. Because
Mm-hmm.
guess what? You like that extra money in your check. Because
Mm-hmm.
guess what? I know this from experience because this happened to me many, many years ago. And it's terrible. So please, for the love of God, never ever do this.
Yeah. Yeah,
Sorry.
that's a bad thing you want to do because what happens is, especially if you don't understand tax liability and you're not working month to month with the actual tax preparer or actual CPA who can actually tell you, okay, you're getting ready to get close to that withholding limit, you may want to start withholding. What'll happen is at the end of the year when you go to file your taxes, you have all this income, but you haven't paid any taxes. And this is not anything with you guys, but if you are working for an employer, just understand that you have to have tax liability. You have to pay taxes. You don't want to go exempt. And a lot of people will go to YouTube or they'll go to a lot of these platforms and they'll listen and say, "Oh well, I can make that much money and not pay any taxes." It's a bad tax tip because everyone's tax situation is different. So, anyway, back to the withholdings and write-offs. Not withholdings, but we're talking about payroll. But anyway, back to the write-offs. Um, Office supplies. So I'm gonna use Vikki, if you don't mind. I'm gonna use your home for an example, just because you have a beautiful space. So for you guys, office supplies. I'm gonna do the difference between office supplies and supplies because almost everything in Vikki's home can be a write-off. So, for example, that bookshelf that's in her corner, that is a write-off, you guys. That's office supplies. That light that's right beside it, that's supplies. All of that is a write-off. Y'all see that nice couch that's behind her? Guess what, you guys? That's office supplies. That's a write-off. That chair that she's sitting in, guess what, you guys? That's a write-off. Y'all
Eh,
see those pictures and frames and everything on her wall? All of that is a write-off. And the reason why is because it's a part of making you guys money. You guys aren't going to just stream with a boring background. For example, like Lashonda, she has a beautiful, nice, it looks like a night background in that picture. Anything that costs money in regards to helping you guys look good as a content creator, guess what? That's a write-off. Do
yes.
y'all see the lights in my house? Those lights are write-off. If you paid somebody to put those lights off, guess what? That is a write-off as well. So anything that you had to expense to make your home or make your page or make just your content look a little bit more elaborate, a little bit more different, a little bit more creative, guess what, you guys? That money, keep your receipts because all of that money that you expense is a write-off.
Yes, and content creators are known for getting LED lights. I have
Yes,
LED lights.
yes,
That is a app controlled light that the chat can now control. All of
yes,
that,
yes. That's a
write
write-off.
it off, baby.
Yes, 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 yes. Write
uh,
it off.
we have two questions. I know you're going to talk about the VPN, but I just want to throw it out there. What if I share a streaming room with my husband or significant other? We share a whole setup, so it's two individuals, two separate
Is it
individuals.
under the same tax identification number? If it's under the same tax identification number, then I mean both of you guys could just write it off together because I'm assuming that you guys will be filing jointly. But if it's two separate identification numbers, then you guys, yes, don't 50-50 because it's two separate identification numbers and you guys are paying whatever it is that you're paying, so you guys can definitely write that off. Absolutely, because it's two separate entities.
Okay.
That's a Bezos trick, okay? It's two separate. That is something that's
Yeah,
gonna keep your money in
yeah,
both your pockets.
yeah.
They don't need to
And the
know that
reason
y'all
why,
live here. Y'all got that same computer. That y'all using them same monitors. That's nobody's
mm-hmm.
business but your own. What goes on in your house is
There's
private.
nobody.
Okay.
Yeah, yeah. Your house is private, and the reason why I say that is because, and that's actually a really good question. And this goes back to why I say everybody's scenario, everybody's financial situation is different. For example, in this particular question, this young lady, she was married to her husband. So when they file, they're going to file together because it's better under the IRS code. It's better to file. They rather you file together than separately. You get more money. The tax benefits is better when you file together than separately. But in their case, I'm pretty sure they're under two different entities. So the husband has one tax identification number, and the wife has another tax identification number. No one's coming to audit you to see, oh well, who's paying what? Who? No, no one's coming to audit you like that. No, whatever you guys pay, that's what you guys can write off, and you guys can equally, because clients do it all the time. For example, you may have a contractor, and then his wife may do real estate, and they may have two different office spaces, but the utilities are the same, the insurance is the same, the cars are the same. You see what I'm saying? So if it's under, as long as it's under two different entities, you're fine. You're totally fine. And I'm gonna get to that subscription point here in about 2 minutes.
Yeah. Okay.
Let's get into a couple more.
One more question. What could be done with the room that is not only used for content creation? I guess that's in regards to writing it off.
The room that is not regard to content creation.
Oh, so how this is my living room, but
Mhm.
all this setup is also still an office space. I think that's
I'm
what's
gonna get as soon
okay.
as I get done with write-offs, I'll answer that question too. Keep that question because I'm going to get into home office deduction. I'm going to talk
Okay.
about that as soon as I get done with write-offs. So
Thank
that's
you.
another good question. Great question. Another thing I want to talk about on as far as on the write-off side, you guys, getting back to the write-offs, rent. Rent is one thing that a lot of people get confused with. So I don't know if you guys can see, I'm not rich yet. I don't have a home. I live in an apartment. I'm renting, but I cannot write off the rent that I pay every month to my property manager. So in regards to rent, a lot of people are like, oh, well, maybe I can write off my home. No, you can't write off your home. Now, if you go to a space where someone is leasing a space out to you, that money that you're paying to the lease or that money that that rent money that you're paying to keep that space, that is a write-off. That is tax deductible. But your home that you're paying rent is not tax deductible. It is not. So that's just one thing I wanted to throw in there too. Any content creators that may have to go to another office space or have to go to another location to do any type of filming or to or anything like that. Or this is another example too. say throughout the year, or say last year or this year, say, oh, well, you know what? I had to go to California and I had to rent out this home in California to do streaming. That is a write off. That is a write off, you guys. That is a write off. If you had to go anywhere, you had to pay Airbnb, hotel, or anything like that, and that is considered rent because you had to go to another space to shoot, and that is a write off. Write off. Now that's different than
So
travel. That's
what
different than travel. I'm sorry.
so what you're saying is when I go on a trip for say a birthday and I'm also be creating content while I'm there and I have to pay
Mhm.
for the hotel, I can write that off?
Yeah, that would be travel. That in that case, that would be travel. Well, I'm more so speaking on to say for example, say you know a guy or you know a girl, and she's like, oh well, I have this space that anytime you want to come, you can come and get this space for me, and you can shoot whenever you go and rent that space out, and you pay her that money. That whatever money that you pay to whoever to get that space, that money is a write off. That money is tax deductible. In the example that you gave, that will be under travel.
Okay.
So if you go to a hotel, you go to an Airbnb that's maybe not in your hometown, and you're just there for a few days just to do a little bit of content, that is also a write off as well, and that's under travel. So I guess I just killed two birds in one stone. So
Yes.
travel and meals, I guess the lead into that travel and meals. So like Vikki was saying, if you guys go to a convention and say some of you guys may be in California on the West Coast and you have to travel all the way to the East Coast, that plane ticket, the Uber that you had to pay or the taxi that you had to pay. I know taxis are done. Um, anything that you had to pay in regards to travel to get you to wherever you need to be in regards to the business, all of that is a write off. The train ticket, airplane ticket, and all meals, you guys. Every single last meal that you eat in regards to streaming, even if it's, oh, I'm finna go to McDonald's and I'm gonna go stream, that is a write off. Because if you don't have the energy to stream, then yeah, you didn't think about that, did you, Vikki? Yeah,
So when I
because
ordered, like a pizza and now I'm munching on stream while I'm talking and crocheting and I'm eating my pizza.
isn't that mukbang? Is that mukbang? Is
Yeah,
that
cuz they're
called
usually
mukbang?
they're
That's a
watching
write
me
off.
eat it.
That's a write off. That's a write off. Yes, ma'am. If you order Domino's pizza and you're eating on stream, yes, ma'am. That's a write off. If you decide to order Steak 48 or you decide to order Roof Chris, and they're like, well, my content creators love this. You're doing it in regards under the tax identification number, and it is a meal, especially if you're getting paid for this. You're getting paid to eat meals on stream. Think about it. If I think about it, because also subscribers too. Well, I love to see her talk, and I love to see her give me some tax advice or give me a little bit of advice on content creation. And man, what is she eating? Oh well, and on your side is like, well, you know what? I'm gonna do something different to get more subscribers. I'm gonna order some food because I know some of my subscribers have said, oh, well, I love that you ate a second. Because I've noticed that with mukbang, nothing I could ever do. But yes, ma'am, that is a write off because it's meals. All meals in regards to the business is a write off. Yes, ma'am. I'm glad that you gave that example because that's a good example. Mukbangs, when you do a mukbang, you guys, that is a write off. That is a write off. But be careful because again, it has to be under the entity. Now, if you're just taking your girlfriend, your wife out to dinner, and it has nothing to do with, that's not tax deductible, you guys. And I'm glad Vikki gave that example because that's a great example. If you're doing a mukbang or a meal here and there because you have to travel because you're having to do you have to do some, or for example, if you're editing a video and you haven't ate in 12 hours, come on, guys. That's a write off. You need to order some Chinese food. That's a write off. So yeah, meals and travel are write offs. In regards to go back to the rent, if you are renting an office space, you're renting a space, you have to pay any utilities, so the gas, water, or insurance. That is also a write off as well. So I know utilities may be small, and I'm gonna talk about utilities with the home office deduction, but in utilities or anything like that, in regards to a space where you're having to pay to do content at, that is also a write off. Um, Another thing too. Now this goes to answer the subscriptions question. And a lot of you guys are probably having to pay for, like, for example, I have PlayStation. You probably have to pay for the PlayStation subscription or the Xbox subscription. Any Norton security or security software that you may have on your desktop computer or your gaming system or your PC. All of that is a write off. Also, your cell phone bill. The cell phone bill is a write off. Every whatever you paid all month, total that up, that is all a write off. Your internet, because it's how can you stream without internet? That is also a write off as well, you guys. And that will be under other expenses, but all of that is a write off. That is a write off. So those are, and I will share that too. I'll share that with Emmy. I'll send her a email so that way she can share that with you guys. This is a little bit of things that, oh well, I can write that off. Just, some things to remember in regards to write offs.
Okay.
So the subscriptions question, yes, ma'am, that is a write off. To the person to answer that question, if you pay for a subscription monthly or yearly or however, that is a write off. Yes, you can write that off because I know that can get really pricey.
Mhm.
Also, my last thing I want to talk about too as well, taxes and license. So when we were talking about earlier in regards to setting up a business, I know in North Carolina, when you file your articles of organization, you're going to pay a $202 fee to the state to set your business up. That fee that you pay to establish yourself as a business, that is a write off. You can write that off as well. So I just wanted to throw that in there too. Or any other little continued education, anything that's related to the business to make you better as a content creator, or anything to help you further yourself as a content creator, any type of classes that you take or anything like that, that stuff is a write off. So just want to throw that in there as well.
Okay. And I know you're about to hop into the home office aspect, and we have a
Yes.
couple of questions. Um, can your write-offs be more than the money you made from content creation?
Uh, that's a very good question. A lot of people take a lot of losses. You'll be surprised because, again, I don't know if you guys remember what I said earlier, is that a lot of times your profit, you're gonna spend more on operating the business. You're gonna spend more on trying to get the business just to keep operating and keep floating than you are receiving gross profit. So a lot of times, yes, you're gonna take a loss, but that's the name of the game. That's American capitalism. Just keep your head down, keep working at what your craft is, and then the gross profits will come. Um, but yes, you'll probably take a loss, but you definitely want to keep a track of all your write-offs, because what happens is, you don't want to receive a lot of income and you don't have any write-offs. Now that's a red flag. That's a red flag because the thing is, well, you receive, I don't know, 50 grand and your gross profit is around 40 grand. Well, where's your expenses? Especially if you're a $50,000 content creator. I don't know how much that, in you guys' world, but I'm pretty sure that's a lot of money. 50,000, $50,000, working, you know, as an employer is a lot, for an employer is a lot of money. So, it would just be, it would be a red flag. So, um, absolutely, you definitely want to keep account of your receipts and keep account of what you spend money on. Even if at the end of the year, like, dang, I took a loss, that's okay. The thing is that that's a part of the name of the game, and that's a part of American capitalism. You look at your expenses and you say, well, what did I really use and utilize this year, and what did I not utilize this year? What did my subscribers like? What did my subscribers not like? Those are the
Mhm.
things you kind of start to kind of play and say, well, I won't expense more on this because I can get more on the back end on this. If
And
I
the
oh, go ahead, Sean. I'm sorry.
So I'm sorry. And the reality is that as you are building your brand and as you are getting more engagements and earning more revenue, you're being, like I said, your initial startup costs are going to cost more. You're going to pay for equipment. You're going to be paying for expertise. You're going to be paying for setting up your LLC or setting up your business entities. So all of these expenses, you may run a deficit, and you will be able to write off and have more in expenses than you actually earn. But that should start turning the tide as your brand is building, and as you have more engagement, more collaborations, and brand endorsements and engagements, as well as your uptake in advertising. So these things will swing, but all we all know that just like content creation, just like every single new business, you're going to lose money in the first couple of years of operation as you get the kinks out. Good thing about tracking, looking, seeing what works, what doesn't work, and also having a professional on your side to be able to help you reassess these things as you move forward.
And you'll also notice that a lot of the first year expenses that you'll get, like for example, your computer, for example, in Vicky's house, a couch. When will you ever get that again? Maybe what, 4 or 5 years from now, you'll get another desktop, you'll get another gaming system. So a lot of your most heavy duty expenses that you're going the chunk of your expenses are going to really occur in the first couple of years, and that's really you just figuring out the name of the game and figuring out what works best for me. What subscription works best for me, what software works best for me, and then it's just the name of the game. It's just figuring out what works best for you, and then adding or subtracting as you go. So
Uh,
yeah.
yes, thank you. And then we have another question. Can a credit card transaction history be used to record purchases in case of an audit or if you don't have receipts?
Absolutely.
Yes, absolutely. Yes. But the only way you will be able to track that is if you're doing the bookkeeping yourself. So if you're and that's actually a great question because in my line of work when I do bookkeeping, a lot of business owners, especially those that for example, they have to expense a lot of money to keep the the business going and operating. For example, contractors, maintenance guys that do building maintenance. A lot of those things cost a lot of money. Hammers, nails, nuts, and stuff like that. That stuff costs a lot of money. So you're continuously, or for example, mechanic shops. Think about it, a lot of mechanic shops don't have a lot of that stuff on deck, so they have to use their credit card. But how they recuperate the funds is also by charging the client. But yes, credit cards can also be added as a write off. You just have to do the bookkeeping, however you set the bookkeeping up. But yes.
Awesome, thank you.
And also, the interest that you pay and the fees that you pay on the credit card is also a write-off too. I'm meant to meant to say that again. Interest and fees on credit cards are also write-offs.
Oh, sweet, sweet. I think you're ready to dive into the home office
Yes, ma'am.
aspect.
Yes, ma'am. Do we have any more on the PowerPoint?
Um,
No, this is just my wrap up. So this is all the rest of you. I don't think we have anything else on the PowerPoint.
no.
I'm just pulling up some last minute things here
Mhm.
for the home office deduction because I want to make sure that I get. So when you're doing, so a lot of you guys, because you're streaming at home and you're streaming in the space. What happens is you'll get a tax credit on the tax preparer side. You get a tax credit called the home office deduction. And basically, what that is basically saying that, well, since I use this portion of my home, I need to I want to recoup some type of something for this. So how that works is, you'll take the total home of your home, even if you're renting and in the space. Like for example, I think this is around maybe 690, 700 square feet. Um, the space that I'm in right now may be so you. What you would have to do is you'll take the total area of your home, and what you'll do is you report that, you'll give that to your tax preparer, and then you'll have to physically measure the area of wherever you're streaming. So for example, let's take Vicky's space for example. Vicky would have to measure literally wall to wall, and then from the back wall to wherever the front wall is, and that space, that area right here will be the home office space that's used. Now, what will go on that worksheet, because there's a worksheet that's attached to that gives you the credit. If any of you guys own a home, you guys will get a form called 1098 mortgage interest statement. And basically, because you're paying property tax and homeowners insurance, and you're paying your mortgage, you're going to get a sum of that of wherever that you paid or the interest that you paid. That interest and that real estate tax is going to go on that worksheet. Now, I don't know if you guys remember me telling you about utilities. This is where utilities really come in handy because for all of you guys that are working from home, you guys have to pay utility, even if it's through your apartment complex. That water and utility bill is essential for this form because it's part of utilities. If you have internet and your internet is set up through your home, instead of you reporting the internet on your Schedule C, we will report the internet here because the reason why we'll do that is because this worksheet gives you more of a tax benefit than the Schedule C will. The Schedule C will only count towards your gross profit. This home office tax worksheet will count towards your tax credit. It'll give you more of a tax credit. So that's what we're wanting tax preparers and CPAs will more wanting to make that home office worksheet look a little bit better than the Schedule C, even though it may your gross profit or your write-offs may not be as high, but guess what? You'll have a tax credit which will either bump up your refund or lower your refund. So that's why I wanted to include that home office deduction because that is really key for you guys. Even if, and another thing too, because I'm going to do it. Even if you're not owning a home, you can still use this deduction. Because guess what? This is a home office space. You're using your home in this space to create content or to use it as a business. So that's why I really wanted to include that in there, this home office, and I'm also send over some information to Emmy as well, so that way you guys can kind of see. Oh well, what was Jermaine talking about that home office deduction? I remember that, and I kind of want to use that because this is where we spend majority of our time. This is a really good tax credit, you guys, especially those that don't have kids, those that um, may not have any education. This credit will really help you out a lot. It will really help you out a lot.
Yeah, and especially if you're somebody who, like me, who has multiple jobs, after a certain point, you cannot write
Mm-hmm.
off your student loan interest because you just make
Mm-hmm.
too much money, and they're like, haha, you don't get that anymore. And you're like, no, because
Yeah.
it's so anywhere that I can write something off, write it off.
Yeah. Yeah. Absolutely. Absolutely. Yeah. And bookkeeping is very critical too, you guys. In regards to, I know Lashonda wanted to talk about hiring somebody or talking to someone that really knows it. Um, Bookkeeping will really save you guys on the back end because I know it takes a lot of time to stream. It also takes a lot of time for you guys to put together the videos to make the video because you guys do an excellent job. Like I said, I'm a Madden player. I like to play Madden 2K, and I sometimes like to see, well, I wonder how I can cross somebody up, or I wonder how I can get Patrick Mahomes to roll out to the right and throw a bomb across the field. So some of these things I do myself, I use you guys on YouTube, and I know that the work that you guys do, I really have to give my hats off to what you guys do because that is really really good work, and it is a lucrative business. Um, and I definitely just like I said, I wanted to definitely talk to you guys about bookkeeping because I know a lot of expenses can get overwhelming at time, and once you get to the point where you have, I think, is it uh 1,000 subscribers, Vicky? I don't remember how many subscribers once you start getting. I
Oh,
can't.
yes. So in terms of starting monetization for YouTube, it's 1,000. Twitch
Okay.
has their own numbers, and Facebook Gaming has their own numbers, as well as there's other types of streaming
Yeah.
services that people can be on, and then all of a sudden you start getting ads. You start, people can send you money and things of that sort, and all that. So all that money adds up. All that money needs to be accounted for
Yes.
accordingly. Don't be like, oh, I'm not even going to worry about no,
Yeah.
no.
Or at least, even if you may see, or if you may think that, oh, I don't need to worry about that. At least ask. At least ask, and I'll give my information to Emmy. I don't know if Emmy is able to share that, but I would definitely want to give my information out for any one of you guys that have questions about certain write-offs and certain tax questions. Or anything like that, or just any general questions in regards to accounting and business consulting. And I'm pretty sure Lashonda as well. We're definitely here to help you guys. So like I said, this is what you guys do is a awesome thing that what you guys do, and it's very lucrative, very lucrative. A lot of people are trying to get into it. A lot of people are trying to get into it.
Yes, it's a
So just to kind of piggyback off of, I'm sorry, Vicky.
no,
Apologies.
no. It's a especially in the middle of the pandemic, a lot of people became content creators and were working from home and are like, oh, I can do this and so on and so forth. And some people were able to then become content creators full time. And I always stressed to them, I was like, well, what money did you put aside to pay for your taxes? And then I see a little question mark comes over top of their head. They're like, what? I'm like, yes, you don't have your job taking out your taxes anymore. What did you put aside to be prepared?
And I'm
And
glad you said that too, Vicky, because that brings up another point about self-employment tax. Because we're all LLC and we're all working under a sole proprietor. What happens is you're gonna automatically get that self-employment tax. But like Vicky said, is that what happens about federal and state? If you don't live in Tennessee or Florida or Texas, you got to pay state taxes. If you filed the organization in the state's gonna be looking for tax money as well. So that's a good point, Vicky, and that's why like Lashonda was saying, is getting with someone that really knows what they're doing and can really help you out and knows your situation, someone that you are comfortable with and someone that you trust.
mhm,
Not saying that I'm trying to advertise my business, but everyone works and lives in different states and things are a lot different. And just getting with someone that's comfortable, getting with someone that can be able to work with you and be able to understand your business needs and your goals and be able to work hand in hand with that. Because it can get very complicated and it can get very confusing, especially like Lashonda was saying, was that a lot of the tax codes change. Like a lot of people still don't know that. Well, if I send $1,000 through Zelle and it was to a business, I won't have to worry about that. But at the end of the year, you're going to get some money that you're going to have to report. So a lot of people are going to be shocked by that when they see that somebody that I didn't report that I thought I wasn't going to report, you're going to have to report. So just getting with a professional to understand, like I said, what you're doing, and they can easily help you out and get you to where you're trying to go.
yes, exactly. Please reach out to the professional, especially it's different from state to state, so keep that in
Yes.
mind. Shonda, please read the beautiful quote.
This is just something that Dr. Tracy McMillan Cottom. She is a PhD sociology professor, MacArthur Genius. She's great. Wrote a couple books, Lower Ed and Thick. But she also did a interview on rap portraits and gave out some big homie tips. Definitely, I recommend you to as creators, definitely read the whole, watch the whole YouTube video because it's awesome. She gives great brand building tips. But one of the things she says is, the biggest best advice she ever gave is to get a CPA. I was actually one of the tips in there is to hire a CPA. And she said, let me tell you who you don't want to fuck with. You don't want to fuck with you want to fuck with the mob before you fuck with the IRS. And I really wish I would have heard this a couple years ago when I went exempt for a whole year. But get you a professional. The fact of the matter is there's so much money being left on the table. There's so much money that you are going to lose or have to pay and be penalized on because as content creators, this is a new way of taxation, it's a new way of doing business, it's a new way of getting paid, it's a new way of earning income. So all of these things, you want to have a professional, and you want to get yourself an attorney. An attorney, yes, she even said the first person she would get is a CPA. She would get someone, an accountant on their side, someone who's going to recognize your vision, who's going to help you be able to help you grow your brand and grow with you as your financials change, as your brand engagement changes, as you are getting more partnerships with larger global brands. So all of these things you want to definitely get you someone on side who's going to make sure that you stay ahead of the tax man, that you will stay, be able to hit your financial goals as well as your overall business and brand goals. So as you can go to the last slide that I have on there, hire yourself a professional, get them on get them on track, make that the first point of business for you moving forward. Like that should be your first point of contact. The thing I would tell you to take away from this entire conversation is to reach out to Jermaine, reach out to someone you know in your area. I'm not a tax professional, but I can hook up some people if you know someone. If in the New York, if you're in the New York area, I do have a friend who is a tax professional that I can give out your information to. I definitely say just reach out, and I'm not knocking, you know, your neighborhood Jackson Hewitt. They're not going to be there for you for the long time, for the long haul, for your real financial goals, for real planning, for real forward thinking. They're going to be reactive, not proactive. So definitely get you a somebody with a those three letters behind their names who are going to be able to, and you're going to try out multiple. You're going to have somebody, but you can, just like a therapist, just like a doctor, just like a hairdresser, a barber. I mean, I'm sorry, maybe not so much a barber because I know how folks is committed to a barber.
Yeah.
Yes.
but you can try out some new people, but you definitely, and also educate yourselves. Like I said, I have my brother-in-law whose house I'm at right now. He does music. He has the IRS on his computer as a tap save tab, just so you can check on things. So you can, if you even if you don't know what it means, you can have some frame of reference when you talk and move forward with your accountant. It doesn't have to be. You don't need to talk to your accountant every day, every week, every month. It could be quarterly. You just set up, and it just keeps you on track, and keeps you ahead of the game and ahead of the tax man. Okay, let's get out here, and we're gonna be making Bezos money, so let's go ahead and be keeping our money away from the IRS like Bezos do it legally. I don't want nobody going to jail.
And
Yes.
I'm glad that Lashonda said that because a lot of people don't realize is that if you're not meeting with someone, especially an accountant, monthly or quarterly, what happens is you go file your taxes in a year, you go to H&R Block, all they're gonna do is just tell you that the bill, they're gonna tell you what you owe the IRS, what you owe the state, and what you owe them. And they're gonna want what you owe them right now before you even file. So you're just gonna be sitting there like, oh, I wish I would have known this. So it's definitely good to get with someone, like I said, that can help you grow, knows your goals personally, knows where you're trying to get to, so that way they can understand. And not only that, but it's a partnership. When you're working with an accountant, it's a partnership. If you become a client of mine, it is my job to reach out to you in a timely manner to make sure that you are meeting your goals on time and you're getting to where you need to go. So absolutely, hire a professional, you guys. Hire a
Yes.
professional.
Yes. So we have one last question. I know Shauna has to go. So the last question of the night is, can you write off something you bought from the previous year you are filing for?
Yes, yes, yes,
So
yes.
there you go. So guys, if you have something that you bought in December of, the previous year and you're using it into this year, yes, you can write it off. So
Yes.
keep your receipts, keep your
Yes.
spreadsheet, check in with your professional. Don't do like so many of us who are, scrambling at the end as April 15th, right?
Yeah.
Comes up.
April. Well,
Yeah.
this year will be April 18th this year, but
Oh,
usually
April
around the
18th.
April 15th deadline, you don't want to be waiting to the last minute, and you definitely don't want to have all your bank statements and going to a CPA firm or contacting one of your tax professionals saying, "Hey, I have all my year stuff. Can you tell me what it's going to be?" He's going to charge you a lot of money. You probably won't get your taxes filed until the week before the deadline. So yes, definitely get with someone ahead before it's too late.
Yes.
Absolutely.
All right, so we are wrapping up for the night. So thank you everybody who
Thank
came
you.
by. Thank you for your amazing questions. Thank you my amazing
Yes.
hosts Lashonda Smith and Jermaine Sanders. If you wanted to shamelessly plug yourself, now is the time. Jermaine,
I
hint,
mean,
hint, hint.
Oh, I'm sorry. What am I doing?
You're
I'm sorry.
shamelessly plugging your business.
Oh, okay. So yes, yes. So yes, you guys can reach me. I'm on Instagram. So you guys can reach me at J Sanders Consulting LLC, and you'll see the on the flyer. You'll see my face and my page, and there'll be a couple tax tips on there. And you can also reach me by email. It's also Jermaine Sanders Consulting LLC at gmail.com. So those are the two platforms that you guys can either DM me or just shoot me an email and we can get together and we can schedule. And all my consultations, you guys are free. I don't charge. for any free consultations. They're all around about between 30 to 45 minutes, and it's just getting a background on me, getting a background on what you need to do, and us figuring out how we can work together and move forward to reach our financial goals. So again, my Instagram, you guys, is at J Sanders Consulting LLC, and my email is the same, Sanders Consulting LLC at gmail.com. So
Awesome.
those are the forms that you guys can feel free to reach out to me on.
I'm sure you're going to be flooded with messages. That is not our fault. Best of luck to
I'm
you.
looking forward to it.
So, thank
Looking
you,
forward.
everybody. Thank you, my amazing co host. Thank you, Emmy, for the background and helping us with all the questions. Thank you, everybody in the chat. You guys are amazing. I hope this has really helped you. I hope you guys are now prepared. If not this year, because you didn't really take care of business last year, you can be ready for next year's tax time. Get your receipts, get your CPA, get everything set up so next year you'll be good to go and you will not be stressed out and paying
Yes.
off the IRS for multiple years to come. Okay,
Yes. Yes.
so
Yes. Yes.
that is it for tonight. Thank you, everybody. Okay,
Thank
Thank you.
you.
bye.